So good afternoon, everyone. I hope everyone is stuffy and happy after the lunch break. So we can just carry on with some of the more interesting insights about DeFi and crypto and the bridge to, the future of finance. So I have a distinguished panel with me today coming from various backgrounds, and we hope that they will be able to contribute a lot of their thoughts on this topic. So gentlemen, may I introduce you to do a brief intro about yourself, starting with Daniel, then Takatoshi-san, and then Brian.
Yeah. Hi guys, I'm Daniel. I'm the head of DeFi of the Algorand Foundation. So Algorand is a blockchain essentially developed by MIT professor Silver McKelly, operating out of the US. But we have a decentralized kind of like group that operates out of Singapore, Dublin, etc. So very happy to be able to share more about Algorand DeFi later.
Okay, over to you, Takatoshi-san.
Hi, thank you for your audience. My name is Takatoshi. You could call me Taka for short. I'm the head of sales for APAC for Copper. Copper is the institutional custodian for institutional investors, and token foundations, family offices, anybody that needs to invest into the crypto market, and we safely custody the assets on behalf of our clients. And our offices are in London, which is our headquarters. We have an office in Singapore and also have an office in New York.
Okay, thank you, Brian.
Yeah, very good afternoon, one and all. I'm Brian Kuttikat, and I'm from India. So if you know, India is the second biggest crypto market in the world. And I am representing CoinDCX. There I'm the director for strategic alliances and all partnerships. And what we, as a CoinDCX, as to just give a background, we are having 13 million plus kind of user base. And today we are the fastest growing regional exchange across the globe.
Okay, thank you, Brian. So my name is Nicole, and I'm the moderator of the panel today. So I'm the co-founder of Duelist King. It's an NFT trading card game, and APAC DAO, which is a Web3 community based in Vietnam and Asia Pacific. Unfortunately, one of our panelists, Arjun, cannot make it to our panel today, but we do have different experts in different areas, like aspects like infrastructure, custody service, institutional business, and also on exchange as well. So I do believe that we're going to have a very interesting panel today to cover a lot of the aspects of DeFi. So just to kickstart the panel, I would like to put forward the first question about the general sentiments around DeFi and maybe around DeFi in Asia Pacific. And I would like to hear your thoughts on that. And if you can name one of your favorite DeFi innovation, let's say recently, then just please share with us. Maybe Daniel, could you start first?
Yeah, for sure. I think DeFi has kind of like taken the blockchain space by storm. 2020, right? Synthetics kind of like coming out. I think the developments for DeFi over the past 2 years has been really pretty, like it has accelerated really quickly, to be very frank. One app I like recently, I think it would be ZK Money. I think that's on building on Ethereum actually. So those are like privacy transactions that users could kind of like send to each other, participate in trading without being traced. That's for their addresses. Yeah. I think in general, I would say DeFi growth in Asia Pacific has been pretty helpful actually. There's a fintech narrative around how users in Indonesia as well as Philippines are kind of like using cryptos basically to help them with their wallet management and cash management essentially. That hasn't really materialized, but we do see in the next couple of years that DeFi could basically positively influence them and help them out.
Okay. Takatoshi-san?
Yeah, so I think the recent debacle around all the crypto lending and all these things that are happening is because crypto was supposed to be all transparent. That was the true nature of crypto. And all these things that happened very recently is everything was very opaque. All the lending, all the risk management, everything was opaque. And I think that the true nature of crypto should be DeFi. And as a custodian, obviously we do plug in our clients into CeFi exchanges, DeFi. But personally, what I think going into the future is how we can build a better DeFi ecosystem. And I think that's something that in this downturn that we have right now is the thing that we should really focus on, because I think the narrative of crypto has completely changed over the past, I would say, decade. and it was supposed to be transparent. It was supposed to be, decentralizing finance, but everything became completely centralized finance, taking everything from traditional finance and just putting it onto crypto. Everything's done off chain. Everything's, opaque. And I think that DeFi is probably the true nature of where DeFi should supposed to go. So whether it be, APAC or anywhere in the world, I think, now is the time to actually kind of focus on how DeFi should really look, how crypto market should look like. I don't really have a favorite DeFi platform, and from a professional standpoint, I should not be even mentioning anything, so I'll just pass on that.
Okay, sure. Brian?
Yeah, so what I do believe is that coming from a finance background and everything, DeFi is the core of any industry or any economy. So if you want to see that which economy is growing or which country is growing, the simple thing is that just to check which banks are growing in that kind of territory or that kind of geography. But now things have been changing. Banks have not been growing according to the technology, and they are putting a lot of things like fees and all those things. And that's the reason why DeFi has to now take this place. So if an economy or if a geography or a country has to grow, then it should be always the DeFi which should play the central stand. Mm-hmm. And again, as a favorite DeFi, I cannot comment on that because we are an exchange and definitely we cannot have any kind of favoritism in this. And so I'd like to skip that question as of now.
Okay. I mean, you don't necessarily have to pick one of your favorite platform, but I think maybe it's more about the innovation in DeFi that excites you most. So maybe I would just move on to the second question about about this kind of innovation specifically from the institution's point of view. Because I think there's I would say one of the key questions for this panel is, what kind of benefits can we deliver to the traditional financiers? So I'm going to poke the dragon by asking this, do you really think that institutions need DeFi products? And if they do, what is the killer product that you think would be able to make a difference in terms of institutional adoption? Okay, maybe Takatoshi-san, you want to take this one first?
Yeah, sure. So as an institutional custodian, we offer access into DeFi, and then we're seeing a lot more institutional investors coming into this space wanting to interact with DeFi platforms. And the most important thing that I feel right now is that there's so many different DeFi platforms offering very similar products. I mean, obviously there are general slight differences, but when these companies come to us and say we want to plug into this kind of platform, that kind of platform, but generally they're all kind of the same. And what I think that what's necessary for more institutional investors to come into this space is to have more variety of services. Mm-hmm. And I'm not just talking about institutional, but even for retail as well, because I find that the narrative of a lot of these DeFi platforms is generally kind of the same. If DeFi is created to people who have no access to banking solutions and traditional finance, why can't we open up more DeFi into various sectors of finance rather than just lending or trading? There's a lot more things that DeFi platforms can offer to, and then I think that's really necessary, because if you want institutions or any type of retail investors come in, you want to have more education on what they're doing. Not just like building a platform and say, hey, try it out. But where's the educational process to get people to get into the DeFi space? And I think that's really lacking, and which I think that, in this, as I mentioned, the downtime that we have right now, that we can actually do.
Brian, do you want to chime in?
Yeah, definitely. So as I said before, so it is always important for DeFi companies to be in a proper manner wherein they actually help the industry or help the countries to develop. So if you see the traditional banks which were earlier doing, they are simply focused on a lot of fees. Like for example, most of you must have traveled down to Singapore to attend this event. And if you just go and swipe your card somewhere, you will definitely see there is a forex markup charge put up there. There is some other fees wherein the base bank in Singapore is charging you, and the issuing bank in your home country is charging you something else. So there are so much fees out there. And this is something which has been happening from so many years and from so many decades. This has to change, and DeFi is the place where the crypto tokens can simply come in and just solve this problem up, because there is no boundary, or you can say geographical differentiation made by these DeFi projects. So all the charges can be literally waived off, or you can say can be skipped if DeFi projects develop in a proper manner.
Okay, so I think we have some interesting angles over there from Takatoshi-san. So it's about, I think it's not the product offerings that might matter, right? It's more about the experiences for your users. As long as you do have this variety of products and the onboarding and the user experience is seamless, obviously that would help to onboard the customers both at institutional and also retail side. And also want to pick up on Brian's point about, let's say, some of the benefits of DeFi in terms of transparency and cost. I think this is also one of the very interesting angle that we want to discuss about the infrastructure of DeFi. Because I think apparently there has been a lot of, let's say, concerns around DeFi adoption in terms of infrastructure. It has to do a lot with the nature of blockchain, with 51% attack. Also with the cost structure, it's increasing, and it's definitely not very comforting to the users. So I think we would also want to bounce this question to Daniel in terms of infrastructure. So what do you think are some of the missing pieces in infrastructure that need to be resolved so that we can push forward with more adoption in DeFi?
Yeah, for sure. I think generally in DeFi, we already have very strong DEXs, that's decentralized exchanges. Basically, a user can exchange one token for another token easily on any blockchain. I would say that one thing that's definitely lacking within the DeFi space would be the bridges themselves. So we have had quite a few bridge hacks recently. For example, there was one that lost around $600 million of users' funds, backstopped by a couple of market makers. So one thing, it's really programming excellency. I think that's one thing that we really have to bolster up together as a DeFi industry, essentially. So when you have developers coming together and actually writing code, right, you want to make sure that this code is really usable and something that protects users' funds. Sometimes innovation gives way to security and safety. It really depends on how developers look at it. But over at Algorand, we make sure that every DeFi application that's launching on Algorand, it's safety first for our users, because at the end of the day, people are transferring funds are moving across our chain, and we want to make sure that it's safe. Back to bridges, I think bridges is also really important because we are really looking at an interoperable world where people are sending funds from Ethereum to Polygon to Algorand, and I think that part is really essential because when we talk about blockchains, right, blockchains are by themselves secure, but the bridges might not be. So I think that's where it's super interesting. Some users, institutional users, are opting to use custodians to help them make that transfer. Sometimes retail users actually make use of exchanges, depositing in and then withdrawing from the other side. So I think as a DeFi vertical itself, we have to kind of build more robust bridges. And then that will kind of be one point we will have to focus on for the next 6 to 8 months, essentially.
Okay, so interoperability and security would be some of the top topics. So we've heard from the solution provider, right? So I also want to hear more from Taka and also Brian, on, let's say, some of the innovations that you want to see in terms of infrastructure, because I do understand that Daniel also pointed out the risk management, which is definitely something, very fragile and something, of course, debatable between CeFi and DeFi. So if you can share a bit more on what you want to see more in the space in terms of infrastructure, that would be appreciated.
Yeah, sure, definitely. I think there are two parts of this whenever a DeFi protocol or DeFi tokens is coming up. So I think Daniel covered up the major part, that is what a token needs to do from the aspects that how things can happen, what the risk mitigation and all those things, which is very much required. But on the flip side, there is one more requirement, that it should be very easy for any consumer or any customer to use the DeFi projects also. Like for example, we all are aware about DeFi tokens. We are all aware of staking tokens and everything. But if you just take a poll that how many people are actually using the staking or the yield management functions, I could guarantee you that out of the whole audience here, it would be only 20% people who would be using the yield farming or the staking facility. Now, why? It is not because the people who are not interested in, it's not that people are not interested to do it, but neither that there are not tokens that giving any opportunities. Tokens are giving opportunities. People are also interested. But where is the gap? The gap is in in the user interface, or you can say in the ease of doing the staking, the ease of doing the yielding parts. Now, if you see any DeFi projects, it is very difficult to do the yield management or the staking management kind of thing, because everything is web-based, everything is highly technical in nature. But now, what we need to do is that we need to simplify things up for the people to start adopting it in a mass scale. Now, why I'm saying this is because this is exactly what we had done in India when crypto markets were not an easy task to crack to. What we did is we made a extremely simple app and gave it to the people. And that's it. And you can see that today, directly 13 million people did sign ups, started trading, and India, all of a sudden, from an economy which was just gold backed, people were just buying gold and all, now they have started buying Bitcoin, crypto, and all those things. So in the infrastructure part, especially to answer your question, I think the things should be simplified for the people to start adopting it.
Okay. Takatoshi-san.
Yeah, I actually don't think that innovation's necessary that much at this point. You know, we all these companies have created or even adopted things from traditional finance and, you know, give it a crypto spin and try to give it to the people. But, you know, that's not where really the innovation should really come from, is actually changing the whole infrastructure, how people can get into this industry, right? So let's say, you know, if I'm living in India or some other place that I don't have banking solutions, how do I get into crypto? Everything's all based on, okay, if you have a credit card, you could buy a token. If you have a banking account, you can get, but if you don't have neither of these, how do you get into this, right? There's no other solution that has been provided, because all these projects wanted to do was create fake tokens, you know, give it to people for EO farming or whatever it is, but how did it really innovate for people who really need access to real finance? You know, there's none of that. You know, are there kiosks out there that people can go to and say, okay, this is my money, can I buy some crypto tokens? Are there, you know, places like that? You know, I don't think that these kind of basic infrastructure has been built out, because, you know, again, all I'm saying, what I'm trying to say is, you know, all these projects just wanted to attract money from retail users that have money, so that they can make money off of them, and then, you know, as I said, like print like new money or fake money, whatever you want to call them, and then try to get them into this space. No, that's not really why this industry was created, right? I think the industry was created so that the basic infrastructure should be laid down first, and then have people who understand that I need some basic financial infrastructure in my life, can get in, and then get into crypto. And I think that we should scale back a little bit, and then, you know, think about how we can really build this out for the masses. So I don't think innovation is really necessary. It's just the basic things that has just been left out of this industry that needs to come back.
Okay, so let's say it's not about technological innovation, but we are talking more about like the very fundamental kind of structuring of the infrastructure of, as you mentioned, the UI and of course the UX, just to make the crypto products like more accessible to the mass out there. So from what I think Takatoshi-san kind of mentioned, I also picked on some of the interesting topics. So we talk about CeFi, centralized finance, and DeFi, and also of course about regulations as well, because those would be the two, I think, leverages that we need to actually like talk about DeFi for the mass. So maybe let's tackle the first question about CeFi and DeFi. I also posed this question in the fireside chat this morning about where would we be able to see the convergence of DeFi and CeFi, because right now we can see that there's actually a huge gap between both of them. So some people would say DeFi is more for the more advanced crypto people and also more for the retail. And CeFi, on the other hand, is still more for institutions and, of course, with people with less risk appetite. So I want to kind of put this question forward and asking you, where do you see the convergence of this, and how can we convert or kind of have some more collaboration between CeFi and DeFi? Because I think that's key to getting more people to actually use DeFi in the future. Okay, so Brian, you want to tackle this first?
Yeah, definitely. So I think this is the follow-up question of what we had asked earlier also, and Daniel had properly said that what the risk mitigation could be, what could be the possible functions could be. In this classic example, we can say one of the failed token coins, which was recently in the news, So this, I think we all are aware of Celsius token. So everywhere, whenever all these things happen, it's a basic rule of finance. I mean, you do not need to know anything much about like any corporate law, or you don't need to be a traditional banker or something, but it's very simple thing that if you get something for 8 rupees, you need to send it for, I mean, if you get something for $8, you need to give it at $10. Okay, that kind of a markup should always be there. If you go to any small businessman also, anybody who doesn't even understand crypto, they would be able to say that, okay, if I am doing business, I would buy at a lower rate and sell at a higher rate. But in case of the failed tokens or tokens which is getting bankrupt, especially in the DeFi part, it is majorly that in order to get growth, okay, in order to get growth and mimicking the startup functions that like how Uber grew or how a WeWork grew, it is majorly they are saying that, okay, we'll take losses first and then we'll take the money and then we'll start making profits. That is not going to happen, at least in the DeFi space. Why? Because there is a clear-cut calculative risk here. Because if you are taking it for $8 and selling it for $10, then you are profitable. But if you are getting it, if you are taking stakes from people and telling them, okay, I'll give you $10 for this, $100 worth of stake, but at the end, as a company, as a DeFi protocol, I'm getting only $8, which means there's a $2 gap there. In this, what happens is that if the market moves sideways, it is profitable or it will sustain. But what happens that if the market just simply goes up, or if the crypto adoption goes up, this model is not sustainable. So if the market goes up, it will anyway collapse. If the market goes down, it has to collapse because there is no liquidity. So that's the reason why people are saying that, okay, we do not want DeFi, we want CeFi. But the thing is that only this gap needs to be filled up, that there should be a basic finance risk mitigations, what as Daniel said, risk rules which should be implemented onto the DeFi segment.
Okay. Anything to add on, Daniel?
Yeah, I feel that Brian has raised a really good point. On DeFi, actually, I would say around 95% of the loans are actually over-collateralized. So that means that a scenario like using clients' fund for other purposes, I think that's kind of highly unlikely. But one thing that a lot of us do not notice is that since a lot of these corporations, a lot of these companies operating the DeFi protocols are essentially private companies, they could themselves go bankrupt. And this is what we actually saw and what we're observing right now in the space. So clients' funds are safe, but they themselves are not safe, essentially. So that one's really, really tricky, yeah. So.
Okay. What about you, Takatoshi?
Yeah. So from Copper's standpoint, we have this product called Clearloop, which allows for clients to trade on exchanges without having to move their funds onto exchanges. So the way that we do this is by having the exchanges also leave a deposit with us so that we can net off the trades in the back end. We have a lot of tough time going out to exchanges and trying to connect them to our Clearloop solution. If exchanges, and sorry, Brian, I have to say this, but if exchanges are actually doing what exchanges are supposed to be, why can you not leave deposits with Copper, right? You're actually doing something with clients' funds, right? And that's why you don't want to leave funds on Copper, so that our clients can net offer their trades. So this opaqueness of what CeFi is doing has to stop. If they're going to be an exchange. If you want to take clients' funds and trade it and do whatever you want with it, then be transparent about it, right? This opaqueness is what led to all these things that happened very recently. It's not just about the duration risk where you're borrowing cheap capital from retail and then telling them that it's that you can get your money back in a couple of days, where you're lending out in 1 year terms to institutional investors. This is not this whole thing is if you're being transparent about it, then people can understand, okay, if I'm going to lend it out, it's going to be held in loans for 1 year. Maybe I shouldn't do this, right? But they don't tell them that. That's the thing that it needs to change as an industry. So I think DeFi or CeFi doesn't really matter. It has to be more transparent with what people are doing, or these projects are doing with people's money. That's what needs to change, and that's what needs to be more clear about. And then I think institutions can actually safely say, okay, I trust DeFi, I trust CeFi as well because of this transparency.
Transparency and trust, I think, of course, are very important, right? especially to the users, because basically they might not know if they are using DeFi or CeFi, but the more important thing is how they feel secure about the assets and the benefits as a user. So I think we have already touched on quite a few topics on CeFi, DeFi, adoption, institutional level. We also talk about, mention one of the, I think, key areas, one of the key hurdles, I would say, of DeFi adoption, that would be regulation. Because I think this is like the elephant in the room that people haven't really tackled. And this is also one of the topics that, that remains there. But then we haven't really talked about how much regulation we need. Do we need under-regulation or over-regulation? Those kind of topics. So maybe as let's say service provider, I also want to hear more of your opinion on this. How much regulation do you think is necessary for DeFi at this stage? Because we cannot really talk about the future, but let's say at this critical stage, how much regulation is needed and where do we need that? Maybe Daniel?
Yeah, so I mean at Algorand, we're always open working with regulators. In fact, sometimes we kind of call our MAS, try to speak to them, based in Singapore, right? So we try to call our MAS to speak to them. I think regulation is definitely needed. We need regulation, especially in the blockchain industry. When sometimes I hear of a Ponzi scheme that goes on the other side of the pond, right? I don't really know. I never even heard of it before, but yet a lot of people have fallen victim. So we need regulation so that the law enforcement could come in and actually weed out all the bad actors, essentially. That's really important. Blockchain is essentially a technology, and we have a lot of people working on it. So there will always be bad actors. The other part of regulation that I think would really benefit, especially DeFi, is that people are holding assets on chain. So some of these assets are actually in USDC, USDT, that's kind of like a stablecoin equivalent, USD equivalent, right? So if let's say regulators come in and they were able to enforce, right, then there wouldn't be any types of issues such as the CeFi collapse, for example, that's been recently happening. So I think regulators will have to take a bigger role over the next 2 to 3 years, and I think the blockchain industry, everyone is going to be super happy to be able to work closely with them. Yeah.
Okay. Brian?
Yeah, so definitely, so there is a need of regulations and everywhere. I mean, but it shouldn't be like on a heavier side. It should be like basic and very normal kind of regulations which is needed. Okay, and this cannot be like once we keep it and directly that is the regulations. I mean, it cannot be said that, okay, it's 2022. So the Act of 2022, which states that this is the kind of regulations which we need to do it. It cannot happen because why? What happens is that crypto and the DeFi part is going through multiple phases. Okay, so it's not like any other asset class or any other industry which is growing like at 20%, 30%. We are talking something wherein we are growing like 10x, 20x, 30x. So at each level, we are tackling some things, and at each level, we need to change our regulations because every level will have its own devil, which means that everywhere there will be some kind of issues which would come into the changes or phases. And mostly every time in every changing level, we need to understand that, okay, these regulations needs to come up, it needs to be updated, improvised at every yearly basis. And we should also ensure that it should not be like overly regulated because then it again doesn't serve the purpose. Because at the end of the day, the basics is that the whole blockchain, the whole IoT, or you can say the whole cryptocurrency was made so that it is decentralized. Only basic, very nominal centralization is required. So that's what we say. We do not need regulations in crypto, but we need a crypto to be regulated. Yeah.
Okay. Takatoshi-san, is there any way that the regulators can work alongside with industry players in forming this kind of regulations around crypto?
Yeah, of course, and I think they already are. I think what I think is important is that while you wait for the government or the regulators to come in and supervise this industry, but I think the crypto industry also needs to self-regulate as well. You can't let all these things happen, while you wait for the governments to come in and try to regulate, because as Brian said, things in this industry is happening very quickly, and you can't wait for governments to, every time adapt to a new frame of how crypto is evolving. So, from the industry side of things, maybe we should have a organization to self-regulate ourselves. Right, and then make that transparent to governments and let them know this is what we're doing to make this industry compatible with traditional finance as well. And I think that effort can be done very easily, and it could be done very transparently. And then we could wait for governments to come in and say, we're going to regulate this. I understand what you're doing. Now I can, understand it. We can come in and then supervise. I think that's the thing that's the extra step that this industry needs to do.
Okay, so I think we also have covered a very key aspect of the DeFi ecosystem, that is, the regulators and regulations. I am personally also very passionate about the ecosystem. So I also want to have, want to have this question to a panelist. So I believe that at the moment, Daniel, you also pointed out that there's this issue of fragmented trust in the DeFi ecosystem, because basically people might not be able to trust the others a lot like before, especially after all of these incidents with DeFi. And I think with the current kind of DeFi ecosystem, how do you think about it at the moment? And let's say for smaller and medium kind of players, is there still any room for them to compete in this field now that, basically we can see that there's already the market is already out there. And of course, the bigger players would have a lot of these advantages in the market already. So from your opinion, what can those smaller startups do just to be able to really kind of compete in the market? Maybe Daniel, if you can just tackle this.
I mean, in the blockchain industry, there's a lot of startups. Essentially, I would say maybe 80 to 90% of the companies working within the space are startups. I would say that startups need to have a very strong use proposition, and basically what the users want needs to be within your product. So if you're copying somebody else's product, or let's say there's already an existing large player within that space, I think it's gonna be very, very hard to compete, because the incumbents are gonna basically price your product out or actually push you out of the market. So what we have noticed, which is new products coming out, I usually notice that they are the ones with innovation in them, essentially. So what they do is that they actually provide a service and they build on top of whatever other people are building. One good example is, if you guys notice, within the space, which is the largest liquidity pool provider, that's Uniswap, right? So there's DEX aggregators built on top of Uniswap. So for example, that's 1inch. So if let's say somebody is providing a great service and that's aggregating and improving the crypto economy, I think there will be a lot of VCs, there will be a lot of people who are looking to fund all of those projects. In DeFi, we have this term that's called building blocks. And what it means is that there is always going to be a base layer. So if let's say the proposition of liquidity is going to be super important, right? So that will be the base layer. Then there will be other services built on top of it, for example, use. Then let's say somebody is providing an auto compounder for use, for example, then that will be on a third level. So as applications kind of find their fit, find the value proposition that they bring for the users, then users will kind of swim in, VCs will swim in. It's always best to be at the edge of innovation and then kind of figure your way out. So there's always room for new players. In fact, I would say that the blockchain industry is an emerging industry and it's a place for new players to come. We want the talented people, we want the entrepreneurs to come in and innovate within the space.
Mm-hmm. Okay. So Brian, is CoinDCX supporting smaller projects, and how?
Yeah, definitely. We are supporting a lot of small projects in terms of giving them funds to develop up the thing and all. So in fact, we are trying to be Asia's biggest venture company into the crypto space itself. So we have another company known as DCX Ventures, which actively supports every other project which is there in every other good projects in the market. So I'll be happy to also let you know that if any of you would have any kind of ideas and you want to implement it, we can definitely evaluate that as a DCX venture part and definitely take things up. Also, in the past 2 months itself, we would have evaluated at least 100 different projects for funding and all those things. And because what we have eventually seen is that probably we all say that this is a crypto winter, and all these things, a lot of these tokens are actually falling apart. A lot of the even the Bitcoin and Ethereum, all these things are actually going down. But what we have seen is that this is not the first time. Cryptos works in a wave market, which means if it's going up, it goes up. It goes down, everything goes down for some time. But one thing to always remember is that whenever the crypto market has gone down, it has always come up and secured a higher high, which means that earlier it was like If it was $50,000, now it would be $60,000. Again, it will come back to $10 or $20,000, but the next time it would be again $75,000. So that's the kind of wave market what we have seen. And what we also suggest, also what we have seen is that in such downtrend, partially, I wouldn't say it is good, but partially it is good because a lot of these crypto projects which are not fundamentally strong, or even exchanges which are not fundamentally strong, all these exchanges would just flush out because of these, because they're fundamentally not strong in their own use cases. So what happens is that we, as CoinDCX, is definitely looking for a lot of opportunity because we are based on a very highly fundamental things, and we only list even tokens which are on a highly fundamental on matters. In the same way, we are also actively looking out for fundamentally strong tokens or crypto projects wherein we can fund and all those things. So that is always open.
Sure. Takatoshi-san, do you see any room that you can collaborate with the DeFi startups here? Is there any niche demands that you think they might be able to deliver and collaborate with you?
Well, we are a custodian, so I mean, there is compatibility in that, but you know, as you know, DeFi is generally non-custodial, right? So you know, people connect with them with MetaMask and all these other things. So as an institutional custodian, there are ways to have our institutional clients invest their money into DeFi, and we have the tools to do that. So yes, we do. We can work with a lot of the DeFi startups. We can introduce them to the institutional investors that we have so that they can access their products. We have the tools to do that. So yes.
Okay. So I think we have covered some of the major aspects of regulations, infrastructure, also the adoption, and of course, like the ecosystem as well. So I think we would have some time to, you know, we have some questions from the audience. So we'd like to open the floor so that you can just pose any questions to the panelists here before we can conclude the session. So just don't be shy, raise your hand boldly, and then we'll come to you.
Thank you. Hi, this question is for Brian. So as you said, India is like the second largest market in crypto. So I want to know what you feel like after the 30% tax and 1% TDS and so many restrictions. Isn't this creating more barriers for Indians to enter into the crypto space and even institutions? So what do you think about that?
Yeah, definitely. So India has been a country where now we are seeing a lot of regulations and everything. But what we see as these 30% tax is that although it is very on a higher note, but then too we are happy that it is being considered by the people and everything. So earlier there was a misconception that crypto might be a gamble or crypto might not be an asset class. But now what we are seeing is that in the Indian community, and Indian community specifically to say, is a very different community from the rest of the world, because Indians believe in a lot of gold, in keeping their asset classes in gold. And even if you see the stock market penetration is just around 2 to 3%. But when it comes to crypto, the penetration is quite higher than the stock market penetration itself. And the second part is that India has a young population which is highly tech oriented. And this is the reason why you see a lot of adoption in Bitcoin, Ethereum, and all the other crypto projects. So the adoption would be very strong. Yeah, definitely the percentage of tax is very high, but definitely what we have seen is that this is something which is happening from past many decades, that any new thing coming to India, like for example, a mobile phone, it used to cost heavily. I mean, the taxes used to be 40%, 50%. There used to be very high number of tax of import duty and everything. But now you can see it is very low, the taxes and everything. So this is eventually would happen that the government would understand that, okay, we are a tech economy and we are an exporting tech economy too. We would definitely help the projects coming up, and at the same time, from the adoption perspective also, we would see a very heavier adoption because of the young crowd and the tech-oriented crowd. So we do not see anything stopping the cryptos, especially in India.
What about the protection to consumers then? I think we talked about this before, yeah?
Yeah, protection to the consumers is extremely important, and that's the reason why in CoinDCX, what we do is that every project is extremely checked upon. I mean, our due diligence is extremely strong. So what happens is that from a listing perspective or from projects which would come into our exchange specifically, because we do not have a control over other exchanges, but at least on our exchanges, any projects which come is heavily done a due diligence.
All right.
And that's the reason why you'll see that across the globe, there are 20,000 crypto projects which is known to people.
Okay.
And there is another 60,000 project which is not known to people. And it's very simple. You can simply go out right from this event, and under $100, you can create your own crypto, and you can simply say that I am a billionaire. But that doesn't work, right? A cryptocurrency should essentially circulate. It should have a good use case. It should have one run properly. So if it's a good use case, and if it has it's a proper project, definitely the user in India or any market in the globe will accept it.
Okay. All right. Thank you. There's another question from the gentleman in the back.
Hi, my name is Sirish Kumar. I think there are two questions related to DeFi. One is that, when the Dodd-Frank Act came in 2010, financial sector, or fintech, what we call today, really became very decentralized, right? Because data could be transferred on mobile applications. So what is it, one single thing that you're expecting from regulation to really help in DeFi? Because I think DeFi, as Takatoshi-san was talking about, is not about technology anymore. It's more about regulation and customer experience where we need to focus on. So that's one question. And the second one is that when you compare fintech with DeFi, what is that thing that DeFi has more applications? Is it the T+2 settlement that we are looking at, which will really have the global scale as an opportunity, or is it removal of middlemen? Because if you talk about removal of middlemen, you still have many wallets today. They're actually playing a role of middlemen even in blockchain, which should not have been the case when blockchain started, right? So these would be my two questions.
The first one. Who likes to tackle the first one?
Right. I think I'll take the second question real quick, right? So what's the difference between DeFi and FinTech? I would say that that's a very good question, because I would say initially, I think probably 2 years ago, there was almost no difference. Essentially, everybody was looking at, hey, FinTech is equals to DeFi, DeFi is equals to FinTech. I think one thing that really makes DeFi stand apart is liquidity. What I mean by that is that DeFi has its own liquidity pools. No matter which chain you're looking at, the liquidity is contained by itself. But FinTech relies on other people's liquidity, mostly the users or the bank's liquidity. So I think that's one primary difference. The second thing will be routing, essentially. So if, let's say, you were a FinTech out of Africa and you wanted to send funds to maybe a FinTech in Philippines, for example, the way you would really route your transactions, right, it really depends on how the FinTech itself is built or the banking partners that they use. So, but let's say you are using DeFi, right? DeFi, you'll be able to route transactions really quickly using the same way somebody was essentially sending their, their assets to each other, which is what Brian actually said. So I would say that the differences are kind of like it's kind of like based on the routing and the available liquidity, actually.
Yeah, I'd like to top it up also. So basically, when you see these fintech companies, they have banks at their back end. So I think you're based from India, right? So in that case, if you see the top fintech companies in India, like a Razorpay or a Paytm or a Cashfree of the world, all these companies, what they have is that although they are the front end, but it's not they are controlling anything. Everything is controlled by the banks. So when it comes to fintech, it's again, there is no revolution or something. It's simply that they are easing the process. But when it comes to the crypto, it's like revolutionizing the things that we do not need banks anymore. We are directly going ahead with the technology aspects, and for transactions, banks are not required at that point, in that perspective of DeFi.
Yeah, and then just one little thing to add is that DeFi is also auditable, where fintech is not, right? So if everything's on chain, you can look at all the trades that have been done there, and also the smart contracts are auditable as well, so you know exactly what they're doing, as opposed to fintech, as they said, the back end is a bank, so who knows what's happening in the background as well, right? It's not auditable. So there's the difference in terms of transparency and how they operate.
I think we have one more. We just have time for one more question, maybe from the gentleman in the front. So I think there's a lot of interesting discussions about the trade-off and also, about different sides of fintech and DeFi here.
Hello, my name is Michael. Right, I just have some few questions. We know that DeFi started.
It's just one. We just have
sorry.
time on one
Okay,
question.
just one. All right. Just I want to ask that DeFi started back in 2015 about MakerDAO in Ethereum's, and right now we have a lot of DeFi like Cardano, Phantom, Harmony. So in the next 10 years, DeFi, is it going to integrate with traditional banks, like what we create, like something called real finance? Are we looking at that point from now to 10 years time? Are we going to have DeFi that actually connected to traditional bank? All right. So give you an example. Is like when I have a house, I can prioritize a house to borrow more money out, but it's in DeFi way where bank can actually come into DeFi and everything, or what you call real fi. So actually my question is to Daniel. Yeah.
Yeah, I actually believe so, to be very frank. So one thing that right now that's impacting the crypto economy right now is that we all know that macro is going risk off, right? But if let's say you are using on-chain, let's say Ethereum, right, everybody's favorite, like where do you go risk off? You risk off by going to USDC, essentially. That's your end of the spectrum of the risk off. That's it, right? So one thing is that I really think that DeFi is going to be a parallel financial system and not a replacement financial system. And what I mean by that is, like what you said, right? If somebody is trying to borrow loans off their house, they could essentially do it on DeFi in the future. And I feel that in the future, when fintech catches up or banking catches up, we will be able to API in via the DeFi applications, and then there would be solutions on DeFi that makes it possible. So it's a parallel financial system of sorts. DeFi right now has quite a lot of volume, so we are pushing a lot of dollars through essentially. I think there was one report that said that I think in 2021 we pushed through $1 trillion worth of US dollars. So that's nothing compared to the traditional banking system, but I say that that's actually quite a lot already. So I do see the growth trajectory of DeFi to constantly expand, probably slow down right now, but accelerate over the next 2 to 3 years, and then in the next 5 years, those will be very great days. Yeah.
Okay. All right. Unfortunately, our time has run out. So, guys, please a round of applause to Daniel, Taka, and Brian. And feel free to catch them and remember their names and faces after this if you want to have any things to share or questions to them. So, again, thank you, gentlemen, for the panel, and thank you very much for your time.
Thank you.
Thank you.